Hey everybody, Smart Silver Stacker here. Hope you're doing well. Hope your computer's working this morning so you can watch this live stream. Now, that's a valid concern today because we are in the midst of what is shaping up to be the biggest cyber failure IT outage in history with a failed patch. That's the story we're hearing from cybersecurity company CrowdStrike, bringing down Microsoft services for a huge number of industries. The blue screen of death is what many people are looking at this morning and over the course of last night. Now, Zero Hedge here has a nice summary of some of the mega corporations affected by this outage. And when you look at this list, you can see how critical this failure really is. TD Bank, Microsoft, Charles Schwab, so trading platforms down. And from what I'm hearing right now, a lot of users of online digital trading platforms still cannot place orders. I mean, think about how important that is for the economy and for these markets. Bank of America, Wells Fargo, Delta, Zoom, Ticketmaster, Google, Amazon. I mean, the list goes on, but this is a huge problem, and it is being resolved. As far as what we're hearing from Microsoft and CrowdStrike, they're fixing this. It's just a glitch in a patch that was applied. But again, many of these services remain disrupted at the time we are creating this live stream, at the time you are watching this. Now, very convenient to me that this takes place in the midst of the market downturn that we have been experiencing over the past several trading sessions. Just about everything in the red today. All the major stock indexes in the red. Tech stocks, of course, we've got the chart of NVIDIA here, but tech stocks have been experiencing a significant downturn over the past several days following comments from the president regarding the use of enhanced sanctions. Also regarding comments from Donald Trump regarding Taiwan's need to pay for its own defense. This all put a big damper on many of these chip-related tech stocks, creating a sell-off in the NASDAQ. Now, this could just be a downturn in, a major, huge bull market, a little bit of a correction. It could also be the tech bubble popping. We're not sure. But very interesting that these disruptions to markets occurring in the midst of this downturn. Now, going to Twitter here, I've got several pictures and videos shared showing just how critical this incident is. So this is at the Denver airport. You've got blue screens of death on many of the computer systems there. You've got the Philadelphia airport showing huge crowds as people are stranded because their flights are being canceled as a result of this cyber outage. Here at just Delta terminals showing blue screens of death. This does not instill confidence. You've got self-checkouts at businesses, shipping centers, airports. Everybody's getting the blue screen of death. Biz Insights HQ account here shares some of the areas often affected by IT outages. So you got financial services, including banks, healthcare, telecom, government services, retail and e-commerce, transportation and logistics, manufacturing, education, energy and utilities, media and entertainment. So pretty much everything is affected by this. And maybe this is just a glitch. Maybe it's just an error. They emphatically are stating this is not a cyber attack. But if this is what happens when they apply a patch incorrectly with a bug in it, think about what happens when a malign actor really wants to sow chaos inside of the U.S. or simply around the world. And, of course, right now, the state that the world is in, there's nobody out there that would want to sow chaos or instigate disorder within the United States, right? I mean, that's not anything we have to worry about. So, look, when you see this sort of thing, it really should give you pause to consider how dependent we are on these digital systems and how true the old stacker adage is that if you don't hold it, you really don't own it. So a big takeaway here, I think, is that any wealth that you have tied up in the digital financial system, it can literally disappear overnight. And you may just not have access to it someday. And this is not fear-mongering. This is like a warning, right? We should take this as a sign to get prepared. Get some cash outside of the banks. Get some physical precious metals that you can hold. And also, reconsider the degree to which you depend on all of these systems. And, what would you do if they disappeared overnight? Because clearly the system is vulnerable. The more efficient and high-tech the system becomes, gives us all these benefits, also makes us more vulnerable. Now, moving on to the metals, we've got the price of silver coming under some significant pressure today, down around $29.39. Gold selling off today as well. Now, to be fair, just about everything in the red today, but metals seem to be really taking a shellacking, especially silver. Although, I view this as a buy the dip market. That's just my take. It's not financial advice. I think that there are some technical indicators that show that perhaps this is near the bottom. Of course, short term, nothing is certain. But if we zoom to the 4-hour chart, you'll see that we actually became critically oversold on the RSI. Now, the RSI, if you're not familiar with it, the relative strength index, this is an indicator which can tell you when things are overbought or oversold. And on the 4-hour time frame, this has actually been a remarkably accurate indicator over the past year or so. You can see that anytime it has reached this critically overbought level, and right now I have it set at about 25. We touched that this morning, and we've kind of ticked up since then. But I just want to show you some other times that it's become critically oversold in recent history. So here's one. That maybe was a little bit of a false signal, but if you go back to December of 23, that's the last time we really became critically oversold. That was immediately prior to a big run up that happened in a span of just 4 hours. And that was, let me see if I can track that down again. Yeah, right here. So that was immediately preceding a move where silver went from, in a 4-hour time, a low of $22.95 to a high of $24.12, a big rally. Now, if we kind of zoom back here, you've got another critically oversold moment here where this preceded a significant run-up, kind of coincided with a bottom. Another one here, pretty good buy signal there, if you ask me. Here as well, pretty good buy signal. So on the 4-hour chart for silver, this has been a reliable indicator to show that the market is bottoming, and it just was triggered. Does that mean that the price of silver is going to rally from here? Not necessarily, but I do view this as a nice opportunity. I had some of you message me actually on Twitter this morning, or on X, I guess it is now, telling me that you took advantage of this and you picked up some silver. And I mean, it looks like you timed it pretty nicely, because they were sending me those messages kind of at the open right when silver was down around $29, and you may have picked the bottom there. So nice job if you did that. Someone in the chat here saying that this is a media suppression of the RNC convention. If you watched that with featuring Hulk Hogan, yeah, look, I don't think that they're going to crash the entire global computer system to suppress the RNC. That seems like a bit of a stretch, but hey, everybody's entitled to their beliefs. That was an interesting show, though. And look, with the Hulk Hogan moment, this is not to get overly political, but it's hard to avoid the analogy to the film Idiocracy, if you have seen that one. Just a sign of, how weird things are getting in 2024, if you ask me. But hey, look, the Orange Man, Donald Trump, as you refer to him here in the chat, looks like he is probably a shoo-in for the next president. So I don't know. Maybe you want to buy some Bitcoin. He's saying he's the Bitcoin president now. But certainly I think gold and silver are going to benefit, as well as just the prices of many assets under the coming presidency. Because one thing's for sure, there's going to be a lot of debt and a lot of spending. We'll talk about that in just a moment. But look, if you do want to get some gold or silver on the pullback today, we have got 1 ounce silver rounds for sale over at SD Bullion, 99 cents over spot, any quantity. I kind of like these listings. It's kind of fun because these are secondary market rounds. And if you've watched my other videos where I kind of show some of the physical silver, I like vintage secondary market 1 ounce silver rounds. They're a lot of fun to collect. And well, you can get them cheaper today than you could yesterday over at SD Bullion. So check them out if you want to buy some silver. Not financial advice, but this is where I buy mine. And I think that this is a nice entry point. Now, what is responsible for the gold and silver sell-off. We can look at this article here from Jim Wyckoff. He does a daily commentary on gold and silver prices over at Kitco. Often has some good insight. So his theory here is that futures traders are taking profits. It's true, gold did just hit a record all-time high. You're a short-term trader, that might be a sell signal. Also, analysts are blaming the sell-off in gold and also on silver on a weakening economy in China, which could decrease demand for raw commodities. Now, you're also seeing this reflected in the price of copper, which this is the 3-month chart. You can see peaked back in May, has come under some significant pressure from this speculation about weakness in China. So this is an article from Bloomberg from 3 days ago. Copper market's biggest whale fuels speculation of a major shift. This was China's State Grid Corporation. So this is the biggest copper buyer in the world, and they apparently shifted to buying aluminum. So they're still buying copper, but they bought less. They bought more aluminum wire, which is sort of a budget option. Now, when you're building a grid, I guess you can use either metal, but copper is preferred. Aluminum is cheaper. This caused some speculation about a slowdown, about the shift from more expensive to cheaper materials as a result of that. But look, maybe China's economy is in trouble in the short term. I don't know too much about where their economy is headed in the short term, but I do know that long term the prospects for China's economy are probably pretty good, if only because of the fact that they are the recipient of massive amounts of cheap Russian energy, which has been diverted away from Europe. Nord Stream got blown up by you-know-who. You can ask Seymour Hersh who did that. And, his name starts with a B and ends in Iden. But look, Russia is now China's top oil supplier. This is an article from May. In fact, they kind of go back and forth with Saudi Arabia, so I don't know what the latest data is. Maybe Saudis are the number one supplier for China. Again, they've kind of been vying for that position with Russia. But volumes in April rose 30% year over year of Russian oil exports to China. They're also exporting large amounts of natural gas. And one of the things that you need to really grow an economy is cheap energy. In fact, that is how the G7 nations, the US, Western Europe, and Japan, managed to grow their economies massively following the Second World War. It was getting a huge amount of cheap oil from the Middle East from the end of World War II until the signing of the petrodollar agreement in 1974. We just got, huge amounts of cheap oil kind of run roughshod over the Middle Eastern nations at that time, exerting our influence around the world. And that is how we grew our economy so massively. So now China is in a similar situation. So look, I think that the demand for raw materials from China is going to continue to accelerate, building a huge amount of solar over there. They've got tons of cheap energy. And despite the fact that we got trade wars going on trying to deny them advanced technology, they're still going to need a lot of gold. They're still going to need a lot of silver. They're still going to need a lot of copper. Not really worried about that in the long term. One thing I am worried about, though, is the U.S. national debt, which continues to charge ever higher. No matter what happens in November, I am convinced that this is going to continue to explode. Now, we know that the past 3 presidents, Joe Biden, Donald Trump, and Barack Obama, all managed to massively expand the debt. There's no reason to think that whoever wins in November, that is going to change. In fact, Donald Trump's plan seems to be to reduce taxes, which I think is a good thing, by the way. I think it's a lot better than what we have going on right now. But it's probably just the lesser of two evils, because I don't see there being any chance that he massively cuts spending to go along with those tax cuts. So where does the difference come from? Well, you know as well as I do that who's going to end up buying all that debt? It's going to be the Federal Reserve. It's going to debase the currency. And we got some interesting news regarding the U.S. national debt. In fact, according to the most recent data from the U.S. Treasury released yesterday, foreign holdings of U.S. Treasuries have risen to a record high in the month of May. Now, that is a rise from $8.04 trillion in April to $8.129 trillion in May. However, you did see the biggest holders of U.S. debt, that is Japan and China, their holdings were shrinking. Japan trying to defend its falling currency by selling U.S. dollar-denominated assets, buying the yen, trying to support its currency. China simply trying to get out of the way of the sanction freight train. Of course, if they try to dump all this debt at one time, that could cause a crisis. If you're China and you're trying to get out of, U.S. debt, you got to do it slowly, but they are dumping it. But however, we're selling so much debt to everybody else that it has hit a record high. However, one important thing to notice here, foreign holdings of U.S. Treasury debt hitting a record high. However, this is a report titled Foreign Holdings of Federal Debt from the Congressional Research Service. I want to draw your attention to this chart. The amount of foreign debt holdings is on the rise. However, this orange line here, this is the percentage, and this is over time, of foreign holdings of the total U.S. debt. So the gray part of the bar is domestic holdings. The orange part of the bar is foreign holdings. Despite the fact that foreign holdings have been on the rise, you have got the total percentage of debt being made up of foreign holdings declining. It kind of peaked in 2008 here. I would say that is when the U.S. dollar really officially jumped the shark. It is when QE started. It is when the massive money printing really kicked off in earnest. And ever since then, you have seen a trend where the percentage of foreign holdings of U.S. debt is declining. So think about this. Record borrowing among foreign countries, and yet there's even more borrowing domestically. It's because we are selling so much debt. We are borrowing so much money, $2 trillion plus per year, that despite the fact that foreigners as a net are buying up the debt, their percentage of the holdings are shrinking. And this is just a bad thing for the economy generally. This is a bad thing for inflation, because ultimately Fed is going to have to buy out all this debt. But you also have to think, if there's all this domestic debt being issued, this is taking away from domestic investment in, real stocks, real businesses, real economies, all the money that is flooding into the debt. So we're seeing a hollowed out economy, huge amounts of borrowing. Now the borrowed money gets spent into the economy, so that then bids up asset prices. But this is a recipe for disaster. And that is why I view today's dip in gold and silver as a buying opportunity. Not only can you hold the stuff in your hand, so when all you're seeing is, blue screens of death everywhere, it doesn't matter. It's not like you're going to log into your gold and silver account and not have access to it. No, you just go pick it up. It's in your hand. It's yours. It's in your custody. Think about this. If you're using a digital trading platform today, say you're using Schwab, for example, you log in today, you can't place orders. What if your positions are in the red? What if you need to get out? What if you've got huge gains and you want to get out and lock them in? You can't. You're powerless. There's nothing you can do. Maybe you can try and call them. You're going to be on hold with, a million other customers who are trying to do the same thing. It's not a good situation. And I'm not saying that you shouldn't have exposure to digital financial assets. It's almost impossible unless you're some self-sufficient hermit in the woods not to, but understand that those can go away in very short order. And who knows? When you have a U.S. national debt of $35 trillion and growing, somewhere where there's really no exit strategy other than default or default by hyperinflation, maybe a global cyber incident is what will be used to reset the whole system. Wouldn't that be convenient? That's just maybe some tinfoil hat speculation on my part, but in light of how vulnerable the system is, maybe we're just being conditioned for that. Maybe this is a warning. I don't know. Let me know what you think in the comments down below. Stay safe and happy stacking, everyone. Hope this cyber attack isn't stranding you anywhere or impacting you too negatively, but it is a warning. So pay heed. That would be my advice. Anyway, I'll catch you next time, everybody. Don't forget to smash that like button. Subscribe to the channel if you haven't done that yet. Stay safe and happy stacking, everybody. I will catch you next time.